The Stock Market Explained, where your money rides the wildest roller coaster. Welcome, my fellow thrill seekers, to the financial amusement park known as the stock market. I'm your host, Your Name, and today we're strapping in for a wild ride through the world of stocks, bonds, and why your money sometimes feels like it's playing hide and seek and losing. What even is the stock market? Think of it as a gigantic bake sale, but instead of cookies, companies are selling tiny pieces of themselves. You, yes you, can own a crumb of Apple, a sprinkle of Google, or a questionable slice of Bob's Slightly Used Socks Incorporated. Note, please don't invest in Bob's socks. When you buy a stock, you're basically shouting, "Hey Amazon, I own like 1 pixel of your website now." How does this magical money machine work? Stocks are bought and sold on exchanges like the New York Stock Exchange or NASDAQ, which are basically fancy eBay for company ownership. The price of stocks goes up and down faster than a caffeinated squirrel. And the reasons why? Oh, buckle up. Why do stock prices go nuts? Company performance. If a company drops a revolutionary new product, like say, self-folding laundry, their stock goes. But if they release something cursed singing toasters, anyone? Their stock crashes like an out-of-tune opera. Economic news. Interest rates, inflation, unemployment. If the economy is vibing, the stock market throws a party. If not, it's sulking in the corner, eating ice cream. Investor sentiment. Sometimes the market just feels weird. Like when everyone in a room hears a weird noise and panics. Random tweets. Yes, one single, unhinged tweet from a billionaire can make or break stocks. The market is basically doom-scrolling Twitter at all times. Investment strategies, aka how to not lose your shirt. Long-term investing, buy and hold like a squirrel hoarding nuts for winter. Be patient and your investment may grow into a financial oak tree. Day trading. Buy and sell stocks within the same day. It's like playing a high-stakes video game, but instead of losing lives, you might lose your rent money. Not for the faint of heart. Index funds. The sampler platter of stocks. Instead of gambling on one company, you get a little bit of everything. Think of it like ordering one of each from a restaurant because you can't decide. Stocks versus bonds. The ultimate showdown. Stocks. High risk, high reward. You're an owner. Congrats, you now own 0.00001% of Tesla. Possible dividends, aka thanks for investing money. Bonds, slow, steady, and safer. You're a lender, not an owner. You get paid interest. Live case, hype, hysteria, and digital pet rocks. Remember that time everyone lost their minds over digital pet rocks? Yes, that happened. Stocks soared, people got rich overnight, then crash. Moral of the story? Don't chase hype. Research before you invest. Final pro tips from your trusty host. Invest wisely. Don't panic when the market sneezes. Never ever invest more than you can afford to lose. Unless it's in my new self-stirring coffee mugs. Those are a sure thing. They are not a sure thing. And that's a wrap, folks. The stock market may be a roller coaster, but with a little knowledge and a lot of humor, you can ride it like a pro. Or at least like someone who knows which way is up. Stay tuned for more financial adventures, and remember, the best investment is knowing what the heck you're doing.